Hey everybody, how's it going? Good afternoon. Can you hear me? All right, sound is good. Great, let's get started. Hello. Hey Jamie. Hi everybody. Good to see you all. Good to have you all. We're gonna go ahead and get started. Today's webinar is really important. It took me 2 years to write my own trading plan. And that's because I didn't have any guidance on how to do it. And as they say, if you don't, without a plan, basically, it's just a wish. It's just a wishful thinking. So you have to have a solid trading plan that specifies, that tells you exactly what you can do and what you can't do. So I'm going to share my trading plan with you today. Okay? We'll go ahead and get started. I'm going to take the webcam down so we can take a look at the slides, but first a disclaimer to let you know that trading is risky and all that good stuff, and that whatever we discuss today is for educational purposes only. Let's see, is the audio okay? Is the sound okay? Sound is good. If you fail to plan, you plan to fail. That was it. That's the quote I needed, Ashley. Okay, sound is good. All right, great. Let's get started. So how to write the perfect trading plan. A couple of housekeeping items. We're recording this event, so it'll be available for replay for those that don't end up staying till the end or want to watch it later on. Please pay attention because this is near and dear for me, at least. It's really important stuff. And then I'm going to talk about the mentorship program at the end, spend 5 minutes talking about it, answering any questions. For those not familiar with, never heard of me, never traded with me before, my name is Sami Abusad, and I have been a full-time professional trader since 2005. Actually started in since 2007, started in 2005. Obviously, head of the strategic day trader, strategic swing trader, run a bunch of other things. That's all you need to know. All right. Now, here's my 2 goals for this lesson. First, I want you to stop making the mistakes that are holding you back. For me, it's all about controlling risk and all about eliminating the bad stuff, because this way you end up with the good stuff. So if you can eliminate the mistakes, eliminate the things that are holding you back, you're already 50% there, at least 50% there. And then the second goal is to help you create a trading plan that works for you, that fits your own personality. So make sure you take some notes as we proceed here. Okay. When I first went full-time, the first stock that I thought about shorting was Radio Shack. Okay, I just thought Radio Shack was outdated, overpriced. There was like 5 different stores in the area where I lived, and whenever I drove by, I never saw anybody in the store. I mean, almost no one, no customers. And yet, Radio Shack in 2007, when I had just started, when I just went full-time, I had been trading for 2 years part-time and saving money so I can go full-time and quit my job, which I did. The chart for Radio Shack, look at this, in 2007. It went from like $17 to 35. It doubled in just 1 year. And in less than a year. This is the weekly chart, in less than a year. So I was confronted with a dilemma. Here I was looking at Radio Shack, the store, and I knew that it just was not a good business based on what I was seeing, and yet the chart didn't look bearish to me at all. So later on I realized that a lot of traders failed because they trade their beliefs instead of chart patterns. Instead of actually paying attention to what is, they think, so instead of paying attention to what the price action is, what the price action is telling them, they think, oh no, it's Radio Shack, it's a bad business, bad company, I need to short it. If I had shorted Radio Shack, obviously, and stuck with my position, right, persisted in shorting it, I would have probably wouldn't be here today to talk about it. So that's the first thing that you need to know about traders, and that you should stay away from also, is you have to trade what you see, not what you believe, right? I personally at the time believed that Radio Shack had to fail, but the chart was clearly bullish. So that's a false belief. You don't want to do that. You want to stay away from false beliefs and stick with reality. Of course, just a few years later, 7 years later, in 2014, Radio Shack had already declared bankruptcy, and I said, okay, well, that's a guaranteed short. And so when it based at 80 cents, I shorted it. It dropped 20 cents. I thought, okay, great, 20% profit. And sure enough, a couple weeks later, it tripled off the bottom. It went from 60 cents to $1.80 in a matter of like 4 or 5 days. Notice again that I thought for sure they already declared bankruptcy. It was going to fail. Remember, what is it? HTZ also? Remember HTZ? Here's a chart of HTZ. Remember this one? It went bankrupt, right? Declared bankruptcy. And what did it do after that? After gapping down on the news to 40 cents, it went from 40 cents to $6 to $6.25. Can you believe it? So you have to be careful about what you believe and whether you allow yourself to act on it or not. It's okay to act on your beliefs, but only if they correspond to reality. Only if the chart agrees with your beliefs. Okay? It's like the people that are short Tesla, right? That are short Tesla from who knows where. It's the most heavily shorted stock in the history of the stock market. Okay, and what is it doing? It's the number one stock probably, and they're the ones that persist, right? They eventually the market basically gets rid of them. They wash out of the market. Okay, so that's the first thing to keep in mind, is your perceived beliefs about what should happen actually cost you money. Okay, the second thing about why traders fail is, a lot of traders fail in this business is because they don't understand their own psychology. The truth is, it's not about how good you are necessarily, about reading charts or about chart patterns. They're a dime a dozen. You can Google them anytime you want. Any pattern you want to look up, you can easily Google it, right? Here's 16 for you, classic technical analysis patterns. But can you make money playing these patterns? Do they work? Under what circumstances do they work, right? You have to understand your psychology and then trade in a way that suits you. Think about all the strategies that are available to us as traders. We have gaps, right? But there's different types of gaps at the open that we can trade. We have reversal plays, climactic plays, like the Uber and Lyft that we were talking about today. Like this one, PR, I still have it on the chart, PRPO, that's a climactic move, right? Climactic move. We have reversal plays. We have breakouts, base breakouts, pullbacks, 1, 2, 3 patterns, like the Shack this morning, that was a 1, 2, 3 pattern, but it went right away. I wasn't able to get it. This is a 1, 2, 3 pattern. Here it is. You're going to see it in a second right there. 1, 2, 3 pattern worked, right? We have bull bear trap plays, shakeouts, scalps, late day breakouts. There's also different time frames that one can trade. You can trade day trade, swing trade, trade earnings. Which strategies make sense for you? Can you do all of this? I don't think you can spread yourself thin and succeed in trading. If you try to be the jack of all trades, master of none, you'll just wash out of the market. So what should you focus on? What should you focus on? Remember what I said. You have to know your psychology. You have to know what suits you. Now, I didn't learn a lot of the things that I know today. I didn't really obviously learn by myself. I learned it from other people. This one thing I learned from Jack Schwager, who wrote the book. It's actually a book series called Market Wizards. He said, in trading as an archery, if there is effort, force, straining, struggling, or trying, it is wrong. In trading as an artery, if there is effort, force, straining, struggling, or trying, it is wrong. And then he also said in the same book that I don't know if you guys know his story. His story was Jack Schwager was a struggling trader. He never got his account to over $100,000. So he said, well, I want to go out there and interview the world's best traders. Just wanted to interview them, thinking that they all traded the same stuff, the same strategies. He knew some traded options, some traded bonds, futures, stocks, but he thought they all traded the same patterns basically. And so he wanted to learn what those patterns were, and he set out to interview the world's best traders, and to his amazement, he found out that he couldn't find two traders that traded the same stuff. They all traded differently, but he found one thing they all had in common, which was they all traded in a way that suited their own personality. Okay? So he said, if you take nothing out of this book, and it's a 500-page book, by the way, it's really big book, and just take this, then it was well worth your time reading it. He said that you have to trade in line with your own natural personality, and that's like a quote. That's exactly what he said, in line with your own natural personality. When I read that, I said, okay, well, how do I know? I wrote down all the patterns, all the strategies that I knew and liked. But I said, how do I know which ones fit my personality? Which ones should I focus on? Can I do them all? I knew I couldn't, right? Because he said you have to trade in a way that suits you, that suits your personality. And so that set me on the search for the inner search, right? But also the search for finding setups that actually suit who I am as a person, because I didn't know who I was as a trader. So you have to understand your psychology. You have to understand what works for you and what doesn't as a person. How you feel, what you naturally gravitate towards, and focus most of your time around it. Focus most of your energy on those type of plays. How many plays do I say no to every single day? Plays that sometimes I point out myself. I say, this looks good. How many per day, every day? Like 100 maybe? I'm not even kidding. How many? A dozen, 2 dozen plays every single day. I do that, but because I trade only the stuff that suits my personality, but also because I know in the long run what makes money and what doesn't, because I've been doing it for a long time. So I see good patterns all the time, every day, right? And some of them end up working really well. But I know from my experience what over time makes money, and that's what I focus on. This is not to, this is not to show off or in any way, shape, or form. I showed you my P&L yesterday when I was down. Showed you, my P&L already today, but there it is, right? I'm up 7,300. I made $7,300 today. My worst loss is $500. I don't know if I can't get it to fit. Let me just see if I can get it to fit. So that's my worst loss. See it? 562, then $400. Best winner was the IBIO, which I called this morning, $4,000. Second best, Sabre, which I also did on the mic this morning. But notice for, and this is the slowest month of the year for me, for the month. Can you guys see this? I can't. Let me see if I can. Here it is. For the month, it's 38 almost. For the year, but that's not for the year. That's just since March. That's when I opened this account. It's 600,000. So I'm only showing you this. I hope you believe me that I'm only not to show off, but first to show you proof that I can back up what I'm saying, but also to tell you that I know what works and what doesn't. Okay, I know what makes money and what doesn't. Okay, so that's why I pass on a lot of plays for that reason, and because I also only trade the things that suit my personality. And I learned that from Jack Schwager, who wrote the book Market Wizards, which is a highly recommended book. You're not going to learn anything practical from the book, to tell you the truth, but you'll pick up a lot of insight, because he was basically interviewing the world's best traders. I mean, Ed Seykota, all of them, all the Marty Schwartz, all the Paul Tudor Jones, all the most famous traders. And that is truly the idea, or this idea that you have to trade in a way that suits you, is truly the foundation of my trading plan. Okay? Market Wizards inspired me to explore my personality and match my trading to it. Okay? Here's why most people are terrified, though, of making a plan. Here's why most traders are terrified of writing. You don't need to tell me, but how many of you actually have a written trading plan? How many of you have a trading plan that spells out exactly what you can and can't do during the day, right? And tells you what strategies you can do, your daily routine, how much you should risk, how you're going to manage the trades, how you're going to manage your risk for the account, how you're going to manage the account, basically. How many of you have that? Probably not even 10%. You don't need to tell me, but probably not even 10%. Why? Because, here's why. It's not because you're all lazy. It's not because of laziness. It's because of two things. First, when you write a trading plan, now your eyes are opened. Now you know what you're supposed to do. Things suddenly get real. If you do stuff outside of your trading plan, now you can't look yourself in the mirror and not feel guilty, not feel bad, because now you know you're not being disciplined. You're not doing what you're supposed to be doing. That's why. So now you can hold yourself accountable. Okay? Whereas as long as you don't have a trading plan, you just say, well, it's just a difficult market right now. Sammy keeps saying right now is a difficult market environment. Or, you come up with excuses, right? So when things don't go well, we don't take responsibilities. Your ego will also be on the line. It'll get bruised when you do poorly. And I rarely lose money. I lose money, small amounts of money, but I rarely lose big money. I have a bad day without it being my fault. It's extremely rare for me to lose, let's say, $2,000 and more, or more, $2,000 or more, and for it to not be my fault. It's almost always my fault. Now, I'm not saying every trade that I take works. No, some trades don't work, of course. But I'm just saying in general, it's extremely rare that if I lose, it's extremely rare that it was just because the plays didn't work. No, it's because I messed up. And when you have a written trading plan, that is, your ego is going to get bruised when you mess up. But that's the part of the growth process. If you don't allow yourself if you don't hold yourself accountable, you're not going to grow as a person, as a trader. Am I right? You're not going to allow yourself to grow. The other reason why people don't write trading plans, the other reason is because they think of it as this massive thing that they have to write, and it's already an overwhelming thought. Where am I going to start? How do I know? Because that's what I used to do in college. Whenever I had to write an essay, I would stress out about it for a week or 2 or 3 weeks, and then just the night before it was supposed to be due, I would pull an all-nighter and write it. So why? Because I would overwhelm myself with the thought of, how am I supposed to come up with a 12-page essay about this topic that I know nothing about, or that everything I know about overpopulation, let's say if that was the topic, I can fit in one paragraph. How am I supposed to write a 12-page essay on that? So I would keep thinking about that, and then sure enough, not end up blocking it, end up rationalizing why I couldn't do it every day, and why I was gonna do it the next day or on the weekend, and then sure enough, couldn't do it. So my recommendation to you is get started. Get started. I'm going to help you get started today. Okay? I'm going to help you get started today. But where do you start? What sections do you focus on? Whatever you want. Doesn't matter. Just get started. That's all you need to do. A journey of 1,000 miles starts with the first step, right? It's the same here. But a plan is required for success. A plan allows you to move forward systematically. It allows you to know what's working and do more of it, what's not, and eliminate it. This is the only way to boost your P&L long term. If you're thinking you want to just trade until the pandemic is over, and then because you're going to go back to your job, in 2 months from now or whatever, okay, you may not need a plan because you're not really serious about trading. You're just doing it for fun while there's a shelter-in-place order or something like this. Okay, I'm not catering to those people, unfortunately. I'm not. So if that's you, then that's not, today's webinar is not for you. This is only for people that are really serious about trading. I don't mean you can't do it as a part-time job. You can, for sure, especially swing trading. Day trading is hard to do as a part-time job. Yes, it's hard unless you only trade the morning session or the afternoon session or something like this. But I'm catering to really serious traders here. I'm talking to only serious traders that are trying to make a living out of this, that are really trying to making an earnest effort to succeed. So that's who I'm talking to. Okay. So in the next few minutes, you're going to be getting the short version of my actual trading plan. How about that? Okay. You can use it as a template for your own trading plan and start building your own outline. Be conservative to start, set modest goals, and easy to follow rules. Don't complicate it. I used to be a perfectionist, and so my trading plan was over 70 pages long initially. My first couple of draft versions were over 75 pages long. And that's just too much. You're not going to be able to follow it if it's really complicated, or if you have too many rules, too many things that you need to remember during the day. And you're going to change. Keep this in mind. It doesn't have to be perfect in the beginning. Don't worry about writing the perfect trading plan. Just get started with any section you want, because you're going to change it on a daily basis, pretty much, based on your experience. You're going to find out, oh, this thing that I have in my trading plan actually doesn't work, or I don't like to do it at all, and you take it out. So you're going to change it every day. I was making changes to my trading plan for 2 years, literally for 2 years. And then once I was done with the final product, once I had the final product, once I was totally done with the trading plan, it went into the closet, so to speak, and I never needed it again. So here I was, killing myself trying to write the perfect trading plan that covered every aspect of the business, every aspect of technical analysis, every aspect of the business of trading, right? And once I was done with it, once I was satisfied with it and thought, okay, this is good, this is perfect, love it, and I knew it inside and out, I never looked at it again. I don't look at my trading plan to this day. Why is that? Because it's built in, okay? Meaning it's in between my ears. Now I know it like I know myself, okay? So I don't need the product. I don't need the trading plan. So it's all about the process that we put ourselves through when we write a trading plan. That's why it's really important that you write your own trading plan and not get, let's say, a copy of my trading plan, right? It's important that you go through the process. Here's actually the table of contents for my own trading plan. First section of my trading plan is called goals and objectives, and we'll talk about it, I guess, in a few minutes. But goals are the big goals, objectives are the little goals that I have to reach in order to reach my big goals. Okay, money and risk management. Section on money and risk management. I'm all about managing risk when it comes to trading. Really, that's what keeps me safe, and that's what keeps me comfortable, because I am, believe it or not, I am very, very risk averse. This is why you don't see any large losses almost ever. in my P&L because I'm very risk averse. If something is going against me, I get out. Okay, I'm very, very risk averse. If you take me to Vegas and give me money to gamble with, I probably wouldn't do it. Okay, it's just not who I am. So I'm all about managing risk. So I have a section on money and risk management. I have a section on entry requirements. And we're going to talk about most of the sections I'm showing you here, but I wanted to share with you the table of contents for my own trading plan so you know what to include in your own. And then I have the 3 strategies that I trade. The only 3 strategies, in addition to scalping, that I've ever traded as a day trader. Okay? Gap strategy, which I use for the open, for trading the morning session. The 15-minute strategy, which is a PM strategy, meaning only for the afternoon. And then the climactic strategy, which, remember this morning I said when the climactics kept popping up in the morning, I said I don't like to do climactics in the morning, at the open, because it is, the climactic strategy is for late. I use it for late morning and early afternoon, usually. So I can use it for morning and afternoon, but I try to focus on one strategy at a time. So gaps for the open, 15 minutes for the PM session, and then climactics for late morning, early afternoon. And then that's it. That's the trading plan. These are the page numbers, by the way. And I wrote my trading plan in PowerPoint, or I completed it in PowerPoint, because I wanted to play a slideshow of my trading plan every morning while I was having breakfast at my desk before the market opened. So that's why I did it in PowerPoint. The downside to doing it, and I recommend doing it in PowerPoint, the downside to PowerPoint is obviously you can't fit too much information on each slide. Not like Microsoft Word. You can fit a lot more info, a lot more words, but so with that being the case, the trading plan is really 11 pages long in PowerPoint. It could be, my trading plan would fit into 3 pages if I were to use Microsoft Word. Okay? A glossary that includes a definition of all the terms and adjectives that I used in the trading plan. You can't say, okay, I can't buy a stock if it has an excessive pullback, and not define the word excessive. Or strong support. What does strong mean? What constitutes strong? Or I don't know, really bullish stock. What does that mean? You don't want to leave any stones unturned. Basically, you want to be very clear about what it is you're supposed to do, and this way it's not left to the idiot, because during the day we become idiots. Basically, we lose our objectivity, right? Especially if you're trading out of emotions, and you don't want to leave anything up to that person, that idiot, as is often the case. You want to know exactly what you're supposed to do, so define everything any adjectives that you use in your trading plan. And that's what the glossary is. And notice the glossary is from pages 12 to 19. That's a big section of my trading plan. And then I have, and this is kind of the appendix, pages 20 through 23, or slides 20 through 23. I have notes on psychology, things that have to do with psychology, things that have to do, and then notes on technical analysis. Okay, I see a lot of questions, but if I start answering the questions, unfortunately we'll get sidetracked, and then so if you wouldn't mind, hold off on the questions until later. I'll take the questions at the end, but hold off for now. Okay, so here's the section on goals and objectives. My ultimate goal on a daily basis is to find setups that strictly meet the strategies outlined in my trading plan, and then the other part, this is the other part, I can find plays all day, every day, but is to execute flawlessly. That's the other part. We can all find setups, but can you execute them correctly? Enter correctly, enter at the right price, exit at the right price, manage correctly, all of that stuff. That's the difficult part. So that's my goal, is to simply find strategies that find setups that meet my strategies, which are outlined in detail in my trading plan, and then execute them flawlessly. If I can just achieve, check it out, you don't need to be, this is the thing about trading. I cannot stress this enough. I cannot emphasize this enough. You don't need to be a genius. You don't need to be really smart or good at math or good at computers or young or old or any of that stuff. You can do it without just being you. Being you. You don't have to have a very... Somebody asked me earlier, which was an irrelevant question because we're talking about something else here. What's your hit rate? What's your batting average? It doesn't matter. What matters is, can you make money? You can make money with a 25% batting average. That's your hit rate. How well you bat, basically. I will show you in a minute how you can make money with even a Sharpe ratio means the average winner compared to the average loser. So if I can maintain a 60% batting average or hit rate, a 2.0 Sharpe ratio, average reward to risk per trade is 2-to-1, and average about 7 trades per day, guess what? I'm golden. I'm golden. Now, some people, because let's say they care too much about being right, they focus on taking plays that they are absolutely sure about. But they can't. But some of the plays don't have much reward to risk. So you have to decide how you're gonna make the money. You can make the money by having a very high batting average, very high Sharpe ratio, a lot of trades. This is what I guess HFTs do, is they make very little money on each trade, but they do 1,000 trades per second. HFTs can do 1,000 trades per second. And so you have to decide what system you want to follow. I have a close friend of mine, who does 1 or 2 trades per day. And most days, I check with him whenever we chat or something. He's down money most days. But when he makes money, he makes 25 hours risk units, 20 risk units, huge. So he makes money by not by being correct all the time. He's actually incorrect probably 75% of the time, 80% of the time. But when he makes money through his Sharpe ratio, by managing trades really well. So let me show you what you can do with just with these stats. These are the 4 things that matter in trading. Nothing else does. Those are the 4 things. What are they? It's your batting average, Sharpe ratio. Your Sharpe ratio is driven is a byproduct of your reward to risk, by the way. So batting average, Sharpe ratio, number of trades you take per trade, and your size, the risk that you take per trade. Those are the 4 things that matter in trading. Nothing else does. So again, batting average, Sharpe ratio, number of trades you take per trade, and the risk that you take, per trade. Is it $10? Is it $500? Right? So let me show you. If you take 6 trades per day and you bat 60%, so 60%, 6 times 6 is 36. So 3.6 of your trades on average are winners. 2.4 would be losers. Per trade, your Sharpe ratio is 2.0. It means the winning trades are twice as large as the losing trades. So per trade, you make twice as much. So 2 R's, and you lose 1 R. Okay? So the total number for the winning trades is 7.2 R's on the winning trades. On the losing trades, you lose 2.4. That means you average on a daily basis 4.8 R's. If you risk $500 per trade, that means you make $2,400 gross at least. Okay? And these days, most brokers are commission free, so you really net $2,400 per day. Per week, that's $12,000. Per month, that's $48,000. Per year, that's $500,000. Can you believe it? Can you believe it? With just these numbers. We're not talking about somebody that bats 90%. We're talking about somebody that gets half of the plays wrong. Almost half of the plays wrong. But what they do also is take 6 trades per day. Okay? And then their winner is twice as big as the loser. And $500 per trade. That's over $500,000 per year. Over $500,000 per year. Okay, check it out. Let's say the person went from $500 risk per trade to $1,000 risk per trade. Obviously, the bottom line doubles. It goes from 576,000 per year to 1.1 million per year. Okay? If you just risk from 500, you go to 1,000. Let's say the person goes from 6 trades per day. You might say, well, 6 trades, that's a lot. I can't do 6 trades. Okay, let me show you the difference between 6 trades and 4 trades. Okay, let's just say we go to 4 trades. Your number goes from 1.1, 1.2 almost, to 768,000. Look at the massive drop, okay, by going from 6 trades to 4 trades. So these 4 things are key. That's the only thing that matters in trading. Nothing else does. Nothing else does. Okay, let's say you went from, so back to 6 trades per day, but you went from a Sharpe ratio of 2.0 to 1.5. So again, from 2.0, so here's 2.0, you at 2.0, you would have made 1.1 million per year. 1.5, half of that almost. It's not quite half. That's 37% less money. From 2.0 to 1.5. Huge. And what's the difference between 2.0 and 1.5? 25% less per trade that you make. Per trade, 25% less. Huge difference. Okay? Let's say you went from from batting average of 60%, just 10% less to 50%. Meaning instead of being right 60% of the time on your trades, you're right now only 50% of the time, half the time, instead of 60% of the time. What's the difference? We go from here's 60%, 1.1, okay, to 50%. Crazy stuff, isn't it? So those are the only things that matter, and that's what you should focus on, and that's why they are in the first part, the first page of my trading plan. Okay? It's the second page of my trading plan. Goals and objectives. So my objectives is to maintain these numbers, these ratios, because if I can do that, then my P&L takes care of itself. I don't need to be Superman. I don't need to be right 100% of the time. There's no such. You can't be right 100%. You can't be right 90%. Anybody that tells you that they're completely lying. Okay? You can't even be right 80% of the time. So my goal is to just be right slightly more than half the time. Can I just be right 60% of the time? Just slightly more than half the time. Can the winners be twice as big as the losers? And that's my secret, is my winners are usually 4 times as big as the losers, at least. So in order to achieve 2.0 Sharpe ratio, I look for trades that have at least 2 to 1 reward to risk, okay? And then I want to average about 7 trades a day. I average 6.8 trades a day. Instead of 7, so I'm pretty close, okay? All right, so your action item, list your goals and objectives. Again, keep it simple to start. Just in the beginning, keep it simple. As I said, can we hold off on the questions? Look, a lot of stuff you can Google also. I'm happy to answer the questions, but it's just easier for you and me if you just Google stuff. How do you calculate the Sharpe ratio? It's the average winner divided by the average loser. Well, how do you calculate the average winner? You take all the winners that you took and you divide them by the number of winning trades that you took, right? So it's the average winning trade divided by the average losing trade. Does that make sense? So a lot of stuff, it's very easy if you just Google it. Okay. All right. But I'm gonna keep going, and then we'll, and then please ask the questions later on. All right. So list your goals and objectives. Again, keep it simple to start. Goal is, if you can make 2 hours per day, you're making 10 hours per week. Okay. If your risk is $500 per day per trade, that is per week. That's $5,000. That's pretty good. You can live pretty much anywhere in the world on that. Pretty much at $500 per trade. Now, when it comes to, it's not just about not losing, but also what happens if you are up, let's say, a certain amount of money. You're up today, we said 7,000. Can you lose that? Can you give it all back? That's another thing that you have to be mindful of. You have to protect your profits, because if you get emotional, you can go bust. You can blow out your account. So how do you protect your profit? So for me, I have this rule that helps me out a lot. In a trade that is already up 2 Rs or more, 2 risk units or more, I trail the trade to protect my gains, to protect break even. Okay, so if I'm up 5 Rs on the trade, then I cannot give back more than 2 Rs, always. So I have to go home with 3 Rs. That's for open trades. So I'm always going to trail by 2 Rs, because sometimes I'm in a trade long and it goes like this, shoots up. And then I start thinking, where do I bring my stop up to? Do I put it up here? If there's no stop, I'm supposed to stick with the original stop and wait for it to pivot before I raise my stop. But in the beginning, I used to panic out of the trade, and it would keep going all day, and then, but without me, because I panicked out of it. Now I don't panic out of trades, because I know that the most I'm allowed to give back is 2 Rs. That's it. But what about realized gains? Somebody just typed, I can make the money, but I give it back, right? We've all done that, right? What about realized gains? If I'm up 5 Rs, then I protect 4, because 5 Rs is actually my goal for the day. Okay? So if I reach my goal, I don't want to stop trading. If I stop trading when I'm up 5 Rs, then I'm basically going against the golden rule of trading, which says to maximize the winners, but also to maximize the winning days. So I don't want to stop myself while I'm on fire, if I'm feeling it and there's plays. But if I reach my goal, then yeah, I want to protect the majority of it, 80% of it, basically, 80% of it. Okay? But what happens if you're up only 1 R, 1 risk unit? What happens if you're only up 2 Rs? What do you do then? So you have to come up with rules that make sense for you based on your own trading. I also have rules for open exposure. How many plays can you have open at the same time that are not protected? You did not raise your stop. 4. What's your maximum loss for the day? Can you just keep trading and if you're having a bad day? We've all had bad days. I had a bad day yesterday. So we all have bad days from time to time. Can you just keep making it worse? Or is there a point at which you will not exceed a dollar amount that you won't lose, that you won't exceed? Well, there should be for the day, but also for the week. A lot of people that go broke in this business trace it back to one really bad trade, or one really bad week, or one bad streak, basically. So I have a maximum loss for the day, for the week, and even for the month, and what I should do once they are reached. I used to just get away for the weekend or something like this, get away for a couple of days. And then when I came back to the market, I was the same old me, trading like an idiot. So no, I know what to do if I have that kind of streak, right? If I have a bad streak or I'm not doing well, I know how to get my groove back, basically. Okay, so you have to come up with ways that work for you, but I'm just giving you kind of an outline here, some food for thought. Create money and risk management rules that you are comfortable with. Remember what I said in the beginning, be conservative. You don't have to cover every nook and cranny. You don't have to cover every aspect of the trading plan, the trading business. No, you can just focus on what comes to your mind and then fill in the holes later on. Okay? Now, entry requirements. As always, I look for trades that fit one of the strategies that are outlined in my trading plan, that has a clear setup and fits a strategy. And then I have rules about the spread, when I can enter, like how much, if I've missed the initial entry, how much can I chase the stock for? What if I missed it by 1 cent, 5 cents, 10 cents? At what point would I just let the stock go? How about anticipatory entries? When can you get in the stock before it even triggered? Can you? Maybe not, right? How about re-entries? A lot of people lose money actually replaying the same stock that they lost on. Can you re-enter a play that you took a stop on? Can you do that? Okay, so figure out what it. Look, if you trade only climactics, it probably would make sense, because the more the stock, let's say you're trying to short something, it goes up and then continues. The higher it goes, probably the better it becomes. So no re-entries for me unless it's a climactic buy setup or a climactic sell setup, right? So come up with your entry requirements, address the volume, the liquidity, the spread, the spreadiness of a stock, the jumpiness of a stock. Address chasing. At what point will you actually let the stock go, let the trade go? So yeah, that's where those things are addressed. Okay, decide what will make you pull the trigger on the trade, and the other things that we just talked about. As I said, I have 3 main trading strategies: gaps for the open, 15-minute buy or sell setups for the afternoon, and the climactic setup for late morning, early afternoon. And then I have the criteria listed. I'm going to show you how to write a strategy for each and every strategy. Each strategy in my trading plan has 4 sections. The must-haves, the can't-haves, the would like to have, and the trade metrics. So the must-haves, this is where I list the things that the chart, that the stock has to show, that the chart has to be showing. The pattern requirements, what it needs to look like. Any additional requirements like the reward to risk, the relative strength to the market if there is any, the whatever other additional requirements you require. The daily chart. What about the daily chart? You may list the intraday pattern. Maybe you say, well, it has to go up initially in the morning, then sideways at lunch. Let's say this was a breakout play for you, and it has to have a shakeout bar right here, red bar on high volume. It has to be at the 20 MA, and then a breakout, and then right at the 20 MA is when I'm gonna play it. Okay, but what about the daily? Can you check that? Can you play it on any kind of daily chart? What about the reward to risk? Where are you gonna take target basically? Is there enough reward to risk? What about the market requirements? Does the market have to look a certain way? Can you play breakouts or climactics or whatever strategy it is that you decide to play? Can you play it when the market is going the opposite direction? So list the requirements for the stock, list the requirements for the market. List the things that will absolutely invalidate the play. If I see this, then I cannot take the play. For example, climactics. If I see that the stock was, remember today we had Lyft and Uber, but what did I say about them? They're not very good because they got bought after a gap down. So that's like a gap bully. Those are tough. They don't come in when they gap down and they get bought. It's too bullish. So if I was doing a climactic short, one of the can't haves is it can't be a gap down that got bought, or it can't be a tier 1 gap, professional gap down and going against the gap down. So if it was a pullback play, then it can't be, the can't have would be, the pullback can't be, let's say, more than 60%. It can't be excessive. It can't be coming from a rounding top, right? It can't be whatever it is that you don't want to see. That's where you list it. Those are the can't haves for the stock. What about the timing with the market? Can the market be downtrending? Can the market maybe be arriving at resistance while you're just entering into the play? Probably not. So you list the can't haves for the stock and for the market, and the would like to have, that's the icing on the cake. What are some of the things that would be great to have? Not mandatory, not an absolute must, but great to have. What are those? For the stock and the market. If it's a market, if the strategy has anything to do with the market, some of the strategies that I do pretty much don't really rely on the market at all. I can do them irrespective of what the market is doing. And the last section of each strategy that I have in my trading plan is called the trade metrics. This is where you talk about the entry, the stop, the target, and the management. So how are you going to enter into the play? Here's the stock. Let's say you're doing a buy setup. I'm just giving you simple examples here. A buy setup is when the stock pulls back after a rally to the rising 20. That's a buy setup. At what point do you enter into that kind of buy setup, into that pattern? Do you enter as soon as it turns up? Do you enter over that? Should you enter over that bar? Should you enter? Where should you enter? Does that make sense? So you list the entry, the stop. In the case of a climactic, it would be low of the day, but in the case of a bicep, it wouldn't be low of the day. In the case of a breakout, it wouldn't be the low of the day, right? In the case of a scalp play, it wouldn't be the low of the day. You list also the overall targets, because sometimes some plays have multiple targets. They have target 1, target 2, right? And then how you're going to manage it. If you get into a play and you don't know how you're going to manage it, guess what? You will not be able to stick with it. You will not be able to hold it. But if before you even entered into the play, before you entered the play, you already knew how you were going to manage it, guess what? It takes the pressure off you. It takes the pressure off you. So you're not going to get shaken out easily, which is a huge issue in trading. So I'm just giving you kind of a template for writing your strategy. I shared this with somebody before, and he said, well, that's too much. How am I going to memorize all of this? No, you're not going to memorize it. You're just going to work on completing the strategy, and after you've gone through it so many times, revised it so many times, it's going to become, you're going to know it by heart. You won't need to actually check your trading plan every day to make sure that, oh, the trade meets my trading plan. No, you will know it by heart. It becomes like a language, basically, almost like a second language to you. Does that make sense? So you want to be as detailed as possible, not because you're going to, memorize all of this stuff. No, but because you want to make sure you leave no stones unturned, basically. Okay? You address every aspect. Oftentimes we think we know, but we really don't, until you start writing things down and you realize how little you know. You thought you knew exactly what the pattern was supposed to look like. But when it comes down to describing it in detail by writing it down, you realize, oh my God, I don't even know how many red bars in a row it needs to have before I can enter. Where location-wise, where it has to be on the chart. You realize that you don't know very much, because that's what happened to me. When I wrote I realized how little I knew. So list the criteria for all the tactics that you want to trade, okay? I have a section on, I don't have any section that's called rules. I just have reminders, which I actually learned from Mark Douglas, who wrote the book, what is it called? Trading in the Zone. Great book. And he wrote also another book called The Disciplined Trader, but Trading in the Zone is much better. And that's where I learned these reminders from him. I'm a patient person. It's like positive affirmations. I wait for plays to develop and only act at the right moment. I identify my edges objectively and within the guidelines of my trading plan. I predefine the risk and reward on every trade. I completely accept the risk, or I'm willing to let the trade go. If you don't accept the risk, you're not supposed to take that trade, because guess what? If you're oversized, you're not going to be able to manage well. Okay, I trade to acquire skill, not for the money, because a lot of people, if you're too attached to the money, of course we all trade to make money, no other reason. This is the main reason why we all trade, is to make money. But if you let the money dictate your actions on a trade by trade basis, you are gonna be lost. You're gonna get emotional. You're gonna get upset all the time. So just tell yourself that you trade to acquire skill, or better yet, tell yourself that you are the employee. The trading plan is your employer. You're just executing the plan that was given to you by the employer. It does not matter what the result is. The end result is. Okay? So if you approach trading like that, as an employee and an employer relationship, it's going to take the pressure off you to perform, to deliver, because you're just executing your trading plan. Okay? Just giving you some tips and hints and hopefully helpful tips on how to manage the trading, the psychological aspect of being a trader. Because it's hard. That's why most people lose. It's not because trading is really difficult. There's only two directions, up or down, right? It's not rocket science. There's only green or red. You can buy or sell. That's it. But most traders lose because of it's a very psychologically taxing business. It's very hard psychologically. So you have to manage, you have to work. 90% of the work is on your psychology, actually. Okay, 10% is the trading part, probably. I have also daily reminders in terms of things, like beliefs that I've learned. One of them is the market's biggest moves ignite from its smallest bars. That's absolutely true. In other words, explosive moves almost always originate from narrow range bars, and a cluster of small bars signifies the calm before the storm. You should commit more to trades that involve narrow range bars, as the combination of lower risk and bigger potential reward warrants it. So that's why I am always looking, when I'm looking for, let's say, a climactic, I'm always looking for a doji bar. Think of it as a U-turn, a car making U-turn. It's not going to make the U-turn successfully without crashing if it doesn't come to a stop or slows down considerably. So that's one of the 5 key tactical reminders that I have in my trading plan. Okay. All right. So I'm just sharing this with you because those things are helpful. Stuff like this is helpful to have in your trading plan. Reminders, things that you need to keep in mind. Okay. Your action item: set your general trading principles and your strategy specific rules. Okay. Now you have a solid outline for a trading plan. It doesn't have to be complicated. When in doubt, keep it simple and be very conservative. Here's how a trading plan actually makes money. Here's how it does. Here's how it makes money. It's if you follow the PAIR, PEAR strategy, then you're almost guaranteed to make money. Not tomorrow, but over time. Almost guaranteed. So the first step is to figure out what it is you want to do. The first step is to write your trading plan. Figure out what it is what strategies you want to do, how you're going to approach the market every day. That's the first step. Then the second step is to go out there and execute the trading plan. But you don't just go out there and trade aimlessly every day. No, you put on a batch of trades. Let's say 20 trades, 50 trades. However, the more active you are, the larger the sample, the batch of trades that you have to take. Okay? But let's say you put on 20 trades. Then you analyze those 20 trades. Remember, you're supposed to take the same stuff every day. Now, you may have different strategies. In the beginning, one strategy is enough. Gaps at the open. That's it. Reversal plays. Afternoon plays. 1, 2, 3 plays. Breakout plays. Breakdown plays. Scalps. In the beginning, 1 or 2 strategies is enough. So, for every strategy, put on a sample of 10, 20 trades, then analyze. Get together with yourself at the end of the week and just see analyze the trades. Figure out what's working, what worked, what didn't. Make changes, refine your strategy, right? And add to your trading plan. Modify your trading plan. Perfect. And then you put on another batch of 20, 30 trades. Do the same thing. Analyze, figure out what's working, and do more of it. Emphasize it in the next batch of trades that you take. Figure out what's not working and eliminate it. If you do this, it is impossible, pretty much, not to get better every week. And if you constantly get better, you're getting better and better and smarter, more knowledgeable as a trader. Guess what? The sky's the limit. The sky's the limit, which is what makes trading interesting. You never arrive. I never feel like, oh, I've arrived. Somebody asked another person about me, what do you think of Sami? And he said, I think he's arrived. And so when he told me, I laughed, because I never think of myself, oh, I've arrived. No, it's interesting. It's the same stuff, but it's different at the same time. And I'm constantly changing tweaking what I do, right? Not my strategies. My strategies are pretty good, but sometimes I'm emphasizing a certain strategy. I'm focusing on scalps. I'm focusing on gaps. I'm focusing on climactics. So other times I'm doing other things. I'm focusing on my swing trading, or I'm focusing on. Does that make sense? So, but this is a living, breathing thing, right? Your plan is alive. It gets better over time. This is where your P&L actually grows. You make more money by understanding what works and what doesn't. It's a process of elimination. In fact, I don't know if you've ever heard of the saying that trading is a process of subtraction rather than addition, right? Subtraction rather than addition. There's another saying that I like, which is, everybody knows this. The quote is, I don't know the key to success or the secret to success, but the key to failure is trying to please everyone. Now, in this case, the key to, I don't know, you should tell yourself in the beginning, I don't know the key to success, but the key to failure is fill in the blank. You know what you lose money on. Most of you know. So that's what you need to eliminate. Most of you know what you lose money on, but you can't help yourself during the day. You end up doing it every day, almost. So I don't know the key to success. I don't know the secret to success, but the key to failure is fill in the blank and work really hard to eliminate it. Okay? If you do that, again, it is impossible to not make money or not get better and become a successful trader in the future. In the beginning, it's a good idea to experiment. Go ahead and try out different ideas, because you don't know in the beginning, because you don't have the knowledge and experience. You don't know what you're supposed to do. So it's okay. Experiment with very small size. Okay? In the beginning. But of course, at some point, you should have enough knowledge to know what you should focus on, and start to get serious about it. Okay? There are many ways to succeed in trading. You just need to find your own path. This is where the unsuccessful strategies and trades should go. Okay? Landfill. That's where they should go. Final piece of advice is, as Nike says, just do it. Just do it. I know what you're thinking, but can't someone else just do it? Nah, nobody can do it for you. You have to do it for yourself. Unfortunately, you have to do it. Okay? Would love to delegate my trading to somebody else. It's not possible. Unfortunately, not possible. So at some point, you're gonna have to just do it. Just gonna have to do it. All right? It's not easy, but if you are serious about trading, just do it. Don't try to write the perfect trading plan. Start and evolve over time. As I said, keep it simple, have conservative goals and trading rules, then measure those results, keep the good, and more importantly, eliminate the bad. All right? Now, I would like to spend just a few minutes, and then I can take questions. Just a few minutes to tell you about this program called the Mentorship Program. Okay? This is an amazing experience if you're interested, so I'll just spend 5 minutes on this. You can read all the cookbooks you want, but sooner or later, you have to get your hands dirty. It is true. Okay? In the mentorship, it's all about the little things. In trading, it's all about the little things. Learning a lot of little things adds up to big P&L improvements, such as how to find and trade the high profit plays. I can find plays in my sleep. I mean, you have no idea. Some of you do because you trade with me every day. But you almost have no idea how many plays I can find if I want to take them all. I'm not even kidding. I can find tons of plays, day trades and swing trades. Okay? But I know what makes money. I know what makes money and what doesn't make much money. So that's something that you need to know, that you need to learn. And the plays that make money usually account for 90% of the money for me personally. 90% of all the money that you make. The rest of the stuff is just for fun. Okay? So how to find and trade the high profit plays. how to execute trades and develop fast fingers. Most traders literally don't know how to use their keyboards. Guess what? I never ever use the mouse for trading. Never ever use the mouse. It's all done by keyboard, because with the keyboard it's just the press of a button. A lot faster than click here, click there. By the time you find the place where you're supposed to click, the trade might be gone. So you have to figure out how to use your keyboard for trading, to enable your keyboard for trading. Rating opportunities, for example. If you don't understand exactly how powerful a setup is, how can you trade it? How do you know what to focus on? Right? In the morning, let's say, when things are moving at the speed of light. That's something that you should learn, okay? And that I will teach you if you attend the mentorship class, which is coming up next month. Some things happen only in person. In most trading classes, you are taught one concept at a time. This is the most efficient way to learn, but putting it all together at an elite level is another story. In real trading, we bounce from one technique to another. You really have to see the pace to understand it. The live group mentoring is ideal because it balances personalized attention with group productivity. Lowers the costs as opposed to one-on-one mentoring. And it certainly beats sitting in a lecture hall with 100 other traders. The next mentorship experience is week-long, September 14th through 18th. Monday through Friday, we do it in our own separate room, just you and me. 5 days full of online education and live trading. So basically I'm projecting my entire setup, my entire screen to you, so you can see it, see what I'm doing at any given time, okay? But there's also a lot of education. It's not just trading. Some of it is going to be trading. Last time I did the mentorship was in June, and it was the first time that I did it online because of coronavirus, obviously. And I made over $30,000. It was the first week of June. Of course, I can show you, but you don't need me to show you because you've already seen this. That's 600,000 just since March, okay? But during the mentorship, while teaching, while trading live, I made over $33,000 or $34,000 in 1 week. That is, in 1 week. It's a truly immersive learning experience, a unique mix of live trading and education. As I said, you get feedback, instant feedback on your trading, and you boost your P&L and confidence. Why online? I used to do it in person. The COVID-19 crisis has made traveling very difficult. We've also gotten rave reviews for our last online mentorship, which we did in June. It was the best ever. I had over 20 students in it, by the way. Some of the things that you will learn is game planning, how to structure your day, how to establish a market bias. You will learn day trading, swing trading. I'll teach you my swing trading strategies, my day trading strategies, trading gaps, trading climactics and reversals. You'll get a copy of my own trading plan, by the way, which has all the strategies that I trade in it. Okay? I'll show you how to set up hotkeys and how to set up your platform, how to scan, market scanning, market timing, sector analysis, trading earnings. I'll teach you how I trade earnings. And the thing about trading is that sometimes trading gaps works best. Sometimes swing trading is where all the money is. Sometimes it's day trading. So it's a good idea to be very, what's the word? Not diverse. What's the word I'm looking for? Versatile. To be very versatile as a trader, because you have to, markets change, unfortunately. Thanks, Stephen. The markets change. Sometimes it's earnings. In November of last year, I made $156,000 in 3 days. In 3 days, $156,000 trading earnings. I'm sorry, it wasn't November, it was in August. Okay, so it depends what's currently working. Sometimes it's, scalping. Sometimes it's whatever it is. So you learn all of the strategies that I do, and be able to employ those depending on what is currently working best in the market. Okay, we'll talk about how to put it all together and how to build your own trading plan. Plus countless tricks of the trade. This is my tiny sample of them. Sidestep market makers trying to fool you on level 2 screen. How to do it. how to basically really read the level 2 screen and trade off of the level 2 window, how to skyrocket your productivity with hotkeys, scan charts faster than you can imagine. I'll teach you my trick for scanning really quickly. When I'm scanning in the afternoon and talking to you and moderating and answering questions, I actually every single day I'm looking at 2,500 charts, minimum 2,000, minimum, in a matter of 10 to 20 minutes. How can I do that? How can I scan 2,000 charts in 10 to 20 minutes? In fact, I can do it in under 10 minutes. But usually I'm moderating, I'm answering questions, so it takes me 20 minutes or so. 2,000 charts. Well, that's something that I'll teach you how to do that. You get the specific metrics for automatically triggering orders, including the amount of slippage I allow for. And obviously, it's a huge boost to your confidence, to your psychology. These are some of the little things that add up to big profits. As we discussed earlier, there are only really 4 things that matter in trading. Just 4 things, 4 simple things. The price is $2,000. In person, it's $4,000. In fact, we've charged also $5,000 for it in the past. But in person, we used to charge $4,000 to $5,000. In online, it's only $2,000. But the beautiful thing is, if you're new to trading at least, you get the Trading the Pristine Method home study class for free. And that's an $800 class. If you say, well, I took the Pristine Method class, T3 will give you a different class, whatever class you want. Let's say Advanced Gap Strategies, which is actually my favorite. Let's say Advanced Scalping Techniques, whatever, right? We have a bunch of classes that you can have access to as part of your package, because it is mandatory that you take Trading the Pristine Method class, so that I'm not spending my week teaching you what a red bar looks like, what a buy setup looks like. So we need to all have some kind of foundation, some kind of a base where we're all on the same page, so that we're all on the same page and not wasting each other's time. But again, it's $19.95. If you're interested at all, contact info@t3live.com or go to t3live.com/mentor. Okay? t3live.com/mentor. And that is it. All right? Any questions? Any questions? Sammy, do you have 2 trading plans, one for day trading, one for swing trading? I don't. I only have 1 trading plan. Okay? The swing trading part is completely separate. I have a manual that has all the strategies in it. But, okay, for swing trading. Okay, how much do you risk per trade? Just $500. $500. Most of my trades, if I lose, they're under 500. Biggest is 560, 400, 150, $60, right? So $500 per trade. I told you, with $500 per trade, you can make a lot of money. You don't have to risk much. You don't have to risk much to make much. You don't have to risk much. What else? Yes, during the mentorship, we are live trading, correct. You don't have to. Some people say, no, I don't want to do that. I just want to focus on you, on what you're doing. That's fine too, whatever you want. But feel free to tag along and take the same plays that I'm taking. You will have my screen projected to you. Okay? Let's see. Is 500? Hey, KK, is 500 for swing trading or for day trading? For day trading. What time does the mentorship start on a daily basis? At 8 a.m. East Coast time. 8 a.m. What's the maximum drawdown on the day as a percentage of your account? 0.0%. I don't know. It's extremely small. My account, I just keep, like right now there's 260,000. I only need 100. I don't even need 100. I can trade the things that I do with $50,000. But I prefer to have 100 or 75 personally. I prefer to have 75,000. Now with interest rates being at 0, so I keep withdrawing every month. I withdraw some from the account. Okay, because if I didn't, it would already be over, 700,000. I funded this account with 100K. To be exact, 105. Okay, so it would be 700. But right now I have 263. At the end of the month, by the end of the month. I can do it right now, actually. I'll go to probably 100,000. But basically every month I withdraw some. Okay. Let's see. What computer platform do you need? In terms of the platform, we'll talk about platforms at the mentorship, but basically just your own platform. It doesn't have to be the same as mine. Whatever it is that you like, that you're used to. So it doesn't have to be the same platform that I use. I use eTrade Pro and Sterling. And then for charts, because I really like these charts, they're very clean, I think. It's Realtic, but it's a premium platform. You have to pay for it. I made the unfortunate mistake of when I started trading 10-15 years ago, I made the unfortunate mistake of actually starting off with Realtic, and it was a premium platform. I wish I had used some free platform, but I just like the charts, and I said it's I just like the charts, and now I cannot trade with something with the platform that has ugly charts. I think these charts look very clean, and so so that's why I use Realtic. But whatever let's say you love the charts, the way the charts look on Thinkorswim, on Ameritrade, not TradeStation, whatever, then use that. You don't have to use the same platform that I use. I just use it because I got used to it, and it's not such a big expense for me at this point in my career to continue to pay for a platform, even though I know 99% of the platforms out there are free, but this one is not. Okay? All right. If your trading plan, for example, says you can lose 500 per trade... No, I'm sorry, I'm skipping questions here. There's a lot of questions. Okay, Sammy, some of your trades are not getting the target or even... never been played. So why do you think the reason? Some of my trades, every single trade that I call, I play. Some of the ideas that I just put out, I don't take. Yes, absolutely. Is it technical, fundamental, or the market is not stable? So does that make sense? Iyad, every single trade that like IBIO, that's the first thing that you see on my, and that was called today. SABR, I called, right? So those were the trades that I called. I don't know what else I called. But there's a lot of trades that I mentioned, but I don't end up playing because, as I said, I try to focus on what I know makes money. That's what it is. I know what makes money and what doesn't. Some of the swing trades, you see, if you're not specific, then I don't know what you're talking about exactly. Some of the swing trades, they don't trigger. If they don't trigger, no problem. So it's just the way it is with day trading and swing trading. A lot of times I'm going to end up canceling the plays if they don't trigger. So I don't know why they trigger or don't trigger. But okay, so it's just some trades never trigger. No problem. As long as they don't trigger, then I'm not in them. Like USO, I've had a call on it for how many weeks now? Days. USO. For a long time. It just hasn't broken out. Okay, no problem. I'll just keep it in the system until it breaks out. Now, what if USO tomorrow crashes? Okay, then I'll cancel the trade. No harm, no foul. Does that make sense? So I don't know why some of them trigger, some of them don't. That's kind of it's none of my business. I just play the ones that trigger. Okay, got it. Next one here. Sorry, there's a lot of questions. I may not be able to get to all of them. So please only ask questions that you really are, that you really want me to answer. But if it's a question that you can Google or it's not that important, then okay, then don't do it. Let's see. Does 5 days need to be consecutive 5 days? I think so. I think if we were to spread it out, over, let's say, a month or so, it'd be hard to like pick up the thread and build on what we discussed on day one. So I think so. But hey, it's not a bad idea. I didn't really think about spreading it out over a period of time. Maybe I'm sure that also has advantages too. Do you have Excel that does the calculation for the risk? I do, but it's printed on so let me just show you. So it's printed on a piece of paper that's taped to my monitor. Okay, let's see. for the swing trading, do you have the mentorship program too? Yes, I do. I'm gonna cover swing trading in the mentorship as well. Can you believe it? Day trading and swing trading is gonna both be covered in the same mentorship program in the same week. Those days, you know, the 5 days are jam-packed with information. They're intensive, but you'll have a recording of it so you can get back to it later on, watch it again. Okay, let's see, do I have a scalping course? I do. It's on the website, or just contact info@t3live.com. Do I trade the news? I don't, but a lot of the plays that I take are news driven. So do I trade the news? No, but a lot of the plays are news driven, but I don't know what the news is. Like IBIO, I don't even know what the news is. I don't care. All I care about is what the stock was doing on after the open. So that's kind of how I view things. Let's see. Yes, the $500 thing. I'm not gonna read the questions because it takes too long. But yeah, that's kind of my limit. I might exceed it. It's a soft limit, but I just know that I don't want to lose more than about $500. Okay, per trade. Trading View or Sierra charts. I've never used Sierra charts, never heard of Sierra charts. Trading View is beautiful and I use it, but I think it limits you're only limited to 8 charts on Trading View. Otherwise, I like it a lot, and so I use it for cryptocurrency, the Trading View. So like I said before, a lot of platforms, each platform has advantages and disadvantages, or good things about it, bad things about it. So some platforms are great at, the charts are very nice, but then you can't set up hotkeys, or you know, whatever. Nothing else is good about them. Or some platforms have all the bells and whistles, but the charts are awful. So that's why I end up using multiple different platforms. Unfortunately, I would rather have just one platform, but I end up using multiple platforms because they each serves the purpose. Okay. Let's see. Is there a program for people who work in other professions but need help with the swing trades? There is. I mean, there's the strategic swing trader, but my recommendation is just get in touch with your trading counselor or info@t3live.com. Ask them that same question, and they can start a conversation with you. But yeah, there is a program specifically for swing trading. And there is a course specifically for swing trading. If you take the mentorship, that's, you know, kind of thrown in, because I will teach you swing trading myself. Okay. Are you projecting your whole 40-inch screen? Yes, I am. But not all 3 of them, because the ones on the side, I'll show you what they look like. You don't need to see all 3 screens. That would, I'm sure that would crash the system. But I'm projecting in the main one where I trade, my trade execution. When is the sign-up deadline? I'm not sure. You'd have to contact info@t3live. So you buy more than $500 per share. Oh, I'm not sure what that means. I do, but it's the share sizing formula is very simple. Some of the things that you guys ask me, I'm surprised you don't know, but it's okay because some of you are new. But it's very simple. It's the share size. When you're share sizing, share size is the risk per trade. The risk that you take per trade. Risk per trade divided by the stop size. That's the formula for it. So okay, so if you risk $500 and the stop size, let's say it's a $200 stock. Right now, but the entry was at 200 and the stop was at 199. That gives you 500. That gives you 500 shares. Does that make sense? Anyways, we can cover that also. We do cover that in the mentorship, and I'll give you a copy of my spreadsheet that calculates the share size. Okay. All right, everybody. Thanks, Steve. Appreciate it. I'm going to correct. If I have 10,000 shares and the stock moves against me by 5 cents, I'm out. Correct. That is correct. Correct. But I don't usually start with 10,000 shares. I only increase my size, and I may go up a lot in size as the stock goes in my favor. So my risk, even if it goes against me by 2, 3, 4, 5 cents, I am not actually gonna lose more than an R. So that's the goal, at least. All right, guys, I'm sorry I'm not gonna be able to get to all the questions. We would be here all night if I did. I apologize, but I hope you enjoyed today's presentation. I really hope you take this seriously and consider signing up for the mentorship. There's nothing in it for me, just FYI, but it's an incredible class, it's an incredible experience, and it's not that expensive, okay? It's not that expensive. And on top of it, you get Trading the Pristine Method class, which you absolutely need to get. Absolutely, regardless of whether you take the mentorship or not, you do need to take that class if you are at all interested in the style of trading that I do, okay? Remember, there's a lot of folks out there teaching trading, but I bet you also $100 that no one ever opens their account and shows you what they're up, what they're making. Not on a day-by-day basis. I mean, just even for the year. You almost never see that. So I'm just, saying that because I just want you to know this is the real deal. I'm not trying to fool you here. This is the real deal. So if you're interested, great. If not, I wish you all the best. And I will talk to you tomorrow morning. Okay? Have a good night, everybody. And I'll see you bright and early at 9 a.m. Take care. Thank you.